Good morning, traders and investors. Thank you for tuning into Pre-Market Prep, the best place each morning to get your overnight news, your breaking news, a whole lot of good trading ideas, and some education. Of course, today is Wednesday, February 19th, 2025. Well, down goes Frazier. Meta down for the first day in 20 days. Guys are going to talk a little bit about the lag 7, Trump kind of refloating, some tariff talk on auto, pharma, semis. A couple earnings reports to look at today. SEDG, that's Solar Edge. Arista Networks, Bumble clobbered. We got earnings out of Grab tonight. We're going to talk about Four and their earnings, Shift4 Payments, and they got a little deal to buy ticker GB in the payment software space. Couple economic data points here today. Building permits and housing starts to go along with toll earnings that were out this morning. Our guest for today, Scott Devitt. He is managing director at Wedbush for internet and e-commerce. We'll talk about a bunch of good e-commerce names and internet names. I'm going to hop over to Joel here in just a sec to get a rundown on the markets. But first, folks, here's that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. That strong rally from the end of the day has faded. Maybe that's because of more tariff talk, the same tariff talk. Down 5 3/4 handles, 61.41. The buck back over 107, trying to make a 2-day winning streak, up 16 cents, 107.12. TLT in the red ahead of the Fed minutes meeting, down 29 cents, 87.81. That's the USO. That's up 58 cents, 271, or excuse me, 67 cents, 77.63. GLD up 58 cents, 271.28. SLV struggling with 30. That's down 2 pennies, 29.89. Bitcoin on the rebound. That's up $2,340 at 96,375. Bring on Dennis and Christian. And Dennis and Christian, should we let our listening audience know about the new PMP record that was set this morning on the pre-market show?
He's always got something for us that we don't know. What is the new record? Brent had to pop in for this either because he wants to know too.
Brent?
New record PMP.
What was the new record?
Most title changes.
Ooh, he's got it. It's true.
Now we know why we pay you the big money.
We actually all have the same salary here, Joel. Actually, me and Joel are probably negative because we're carrying the expenses of the show. So we're negative, but
No,
congratulations, you're correct.
Thank you.
What was a 10% bump in your salary for that?
I appreciate it, guys. Always appreciate it. Why so many title changes this morning, Joel?
Because you know me, I'm S&P centric, and I'm looking at the tight ranges the last couple days. So I'm like, oh, trading range again, then it was range bound. And then Christian's like, what are you talking about? What are you talking about? Look at the QQEW. Look at the Qs. Everything's breaking out. And then Dennis chimes in, so then I thought again. I don't know what the third one was. And then, Dennis popped in with Meta. Down goes Frazier because it broke the streak. And then, and then we decide mixed signals because of the mid-cap tax.
And because there was so many title changes in the show, it's mixed signals even in the title change.
There you go,
This
Dennis.
is mixed signals day here, Christian. Do you feel the same way here? I'm like feeling mixed signals too. I like your lag 7. Meta goes down for the first time in 20 days or 20 trading days. And then you got these mid-cap techs that are kind of just breaking out. You were pointing out the QQEW just kind of blasting off here and actually leading the charge here. So thoughts, Christian Fromhertz. Opening thoughts. We're going to start doing opening thoughts and closing thoughts. We're getting Christian Fromhertz opening thoughts.
Yeah, I feel like my opening thoughts are going to be like my closing thoughts. But I tell you, yesterday we were kind of chopping around yesterday, and I started to kind of look. The Qs actually went red for the day, like around like the middle of the day, and I looked at what QQEW was doing, which is the same stocks that are in the Qs, but equally weighted rather than market cap weighted. And I was like, wow, these things are up. I was like, I'm really seeing some nice strength out there, and the numbers that if you looked at both QQEW, and that was up about 6 or 7 tenths of a percentage point. And then if you looked at RSP, because the S&P was doing the same thing, the SPY was about flat for the day, and you had the RSP, which is up 60 or 70 basis points. And I looked and I was like, well, I know what's dragging us down, and I know we're going to talk about Meta, which was down, but I'm really liking to see that the Mag 7 names, and we've been calling them the lag 7. They really underperformed, and other stocks kind of picked up the ball and ran with it yesterday. So I like that kind of market. I like where there's a lot more stocks going up versus down. But I will go to right back to your theme about mixed emotions or mixed thoughts, because the one thing that we haven't talked about, which maybe we could talk about at some point in the show too, is that we are getting into weaker seasonality for the rest of February. That might happen after monthly options expiration, which is on Friday. So I'm liking what I'm seeing in terms of the QQEW breaking out to new highs. That gets me excited, but then I have to kind of reel it in a little bit, because the end of February is one of the weakest seasonal times of the year. So still have to kind of maintain that discipline and not relax or anything like that. But I have to say, I kind of like what's going on under the hood.
There is some good stuff going on under the hood. Now, again, it's not across the board, but it's sticking with that same theme. We talked about this yesterday, is it still wants to be in tech. People still aren't going to some of these other stocks that are really beating up some of the value names. They want a tech story. Even the earnings this morning and last night kind of telling the same story too, because and if maybe this is a good segue into the earnings report, because you get Toll Brothers, which has been definitely lagging. It had a terrible December, going from basically $165 down to 120. Tried to rally the laggard rally of January, but now that is all gone. It reports here this morning, and it's not great. I mean, value is here. In Toll Brothers, the value has been there, but it doesn't matter because, hey, homes aren't technology, and that's where they want to invest. I'll give you the earnings. They still make a hell of a lot of money, even though they miss estimates. $1.75 versus $2.04. 1.859 billion versus 1.906 billion. So they did miss on the top and miss on the bottom. And that's usually a recipe for the stock to go down. But just give you a perspective here. Toll Brothers currently trading at a PE of about 8. So I mean, used companies make a lot of money, but people aren't into value stocks. They're into tech. So we break down, making new lows, taking out the 120 support on Toll Brothers here. Thoughts, gentlemen? Either of you?
Wow. I'll just go technical. I mean, you got the resistance now, this 120, right? That was the former low of the move. So any kind of rally, I mean, you can't think about this thing in a positive light until you get back above 120. They really whooped this thing. They took it down to 110.30. Got a 5-point bounce on that. So kind of feel like this 108.30 low, this little stinky low here. Actually, that was 108.86. 108.86, 110, good support. I don't know. I don't think you're going to see that again today.
Maybe there's nothing else to say about Homebuilders here, because they are definitely part of the lagging market here and the part that's not participating. There's a lot of other tech stocks, though. And again, we're at this point where it's some of the laggard tech that has been picking it up. It's not so much this morning, though. Most of the companies report actually last night are down. Shift 4 payments is down. I'll just fly through a few of these because there's a lot of companies that report. And if you want to stop at any, Christian, stop me, because I'll ramble on forever. Bumble is down 18%. That's getting hit here. Just cherry picking some of the bigger names. Arista Networks, maybe we should stop at that one, because that one's had a pretty good couple of years, but been kind of lagging as of late. ANET is down here as well, about $6 here. Maybe we'll stop at that one here. I want to get Christian Fromhertz's thoughts. I'll give you the earnings, and then we're going to let him chime in. ANET did report earnings last night. They came out with earnings of 65 cents versus 57, which is a beat. 1.93 billion versus 1.90 billion, which is a beat as well. Guidance slightly higher, but just ever so slight. You got multiple analysts chiming in this morning. Most are reiterating their buys, and then Rosenblatt stands out as like a sore thumb because they maintain their sell with an $85 price target. So Arista Networks, I don't know if the bar was too high, but it was an okay quarter, down 5%. Mr. Christian Fromhertz, are you buying the dip?
I did buy the dip a little bit. I saw the numbers and I thought that they were good numbers. I feel like I've seen this before with Arista Networks where it sells off initially, but then it goes back up. The concern that I read about, which I did not see initially, is that one of their big customers is Meta. And there's a possibility that they might be losing Meta, or it might be a diminishing role for Meta. So that's what's overweighing or that they have a huge revenue concentration in Meta. So I think that's what the concern is, and why it is not coming back this morning.
What the heck happened on January 27th? That wasn't.
That's your DeepSeek.
Yeah.
Wow.
DeepSeek causes a deep dive. It was a buying opportunity on most stocks, but this one is approaching its DeepSeek lows. Is that what we're going to be going to now? Is like this is getting back to its DeepSeek lows, or this is way off its DeepSeek lows. I mean, it always seems like there's an event once or twice a year where the stocks put in a ridiculous move, and then it's like, can they challenge those moves or not? Obviously, in this case with Arista Networks, it's been coming back in. There's a lot of stocks that are gotten all of their DeepSeek losses back. Think like even Nvidia has gotten a lot of those losses back, if not all of them. Arista Networks not. So obviously lagging. I don't know if that means you got good support down at $100. Where did we get down to last night?
We didn't, man. This thing's kind of no man's land for me. 102.41 was your low, so you're $3 off the low. Really, no dailies in that area. The next level after that, Dennis mentioned 99.68, so that $100 area. $5.50 off that. We'll look for a gap fill at the bottom of yesterday's range. Possibility there at 108.25. And before the DeepSeek headline, do you know what? I know you're going to get mad because it's another quiz, but remember what we were referring to? It was back in, I believe it was back in August. The big event. It was right here. Boom. Right at the beginning of August. Remember that?
No, I
the
remember
carry trade, the Japanese yen.
Oh yeah, the carry trade. Forgot all about that one
trade.
too.
Oh, that was a big deal, huh?
Yeah, my memory is shot. I'm getting almost 50 years old here now, and I just can't remember anything.
Dennis, let's talk about the snow. Let's talk about the snow.
Well, snow stock, because this is actually, maybe we shouldn't be long snow because this is the first day in 2 months that it is not snowing. I woke up and actually the buses are running. My kids can actually go down the street and get picked up by a school bus. Isn't that amazing? That's amazing. I know some people take that for granted everywhere else in the world, but up here in the planet Hoth, where we literally have a bazillion feet of snow, like I was shoveling off. I was having, I had a couple kids that got shoveling off, my roof over at my parents' place. I mean, it's just been, just so much snow. People are shoveling roofs everywhere because they're worried about, when the rain starts to come here in a few weeks, and possibly in a couple of weeks, all the snow is going to turn to ice, going to create more problems. It's just, this, I guess,
is this starting to warm up by you guys?
Not at all,
but I mean,
Christian.
like next weekend, I'm starting to see like that the weather's starting to turn a little bit. Looking at that 5 to 7 day forecast, because that's what I'm
if I look
looking
at the
for,
5
too.
to 7 day forecast, we are projected to go above freezing for the first time, I believe, in 2025. I think that's a stat. I don't think we've been above freezing in 2025. So usually you get a day or two it pops up. I don't remember a day above freezing in 2025. So let's go 35 degrees next Monday. So we'll look forward to that. Today, though, right now at this point in time, it is -2. And I'm not talking Celsius. I'm talking to my American listeners. It is -2 Fahrenheit. So I don't know what that is in Celsius, like probably minus 15 or 20. So it is cold, bitter cold. And the snow is all frozen, solid ice. It is just an awful place to be right now. One day, I will look forward to summer coming back, even spring, just, lack of snow. But this is just honestly getting to a point of ridiculousness.
All right. Sorry, I got us off on a tangent. Christian, any technical thoughts on ANAT here? It's really in no man's land to me.
Yeah, I agree with you. I think it's in no man's land too. Like I said, I bought a little bit after hours. I'll probably be out of it because I think it's too difficult. And I like that blue line that you've got in your top right chart that its price is below there, which is telling me something. And I really like what Dennis had to say too. This deep seek thing, which I'm calling some stocks deep sink. Which is horrible, which is a horrible joke, but it's just the way I'm thinking about things. But it's very interesting to see what stocks have come back. Some have fully recovered. Some have done more than that. And other stocks have just kind of been, meandering around like, really haven't done much. And Arista Networks is one of those stocks. So
Yeah.
it's a good way to kind of like separate the strong versus the weak. I prefer the ones that have come back and have overcome the deep seek, while other ones are still kind of sinking. So I really like that what Dennis said there.
And again, like look at a Palantir here. And obviously it wasn't the deep seek stock. It hardly went down at all on deep seek. But I mean, you can clearly see there's just some stocks that are just epically resilient. And I'm using that word very carefully because it has been an epic move here for PLTR. Started the year down around 80. We had a pullback, got down in January, literally 1 month ago to 65 bucks. It's now $125. It's almost doubled in just over a month. And this is, when everybody was saying the valuation is ridiculous. I mean, this is just, beyond ridiculousness. It's gone to pure stupidity. But you know what? It doesn't matter because when it is, in full rally mode, I always said valuation doesn't matter when the story is hot. And the story continues to remain hot. So 200 times earnings, 300 times earnings. Once you're 200 times earnings, why not go to 400 times earnings? Why not go to 1,000 times earnings? It doesn't even matter at this point in time. It matters when you get that break of momentum, because momentum traders have it by the horns and they don't give a crap about valuation. But when you do get a break of momentum, that's when it starts to matter. And the reason I'm going to this is I want to talk Reddit for a second here too, because has Reddit, which was basically the Palantir twin, trading, not quite as a ridiculous valuation as Palantir, but definitely, a stronger valuation. It's not getting a lift back here. This dip has not been bought on Reddit. So maybe it's the third day's a charm thing. I see your moving average in the top right corner, Joel. It looks like it's kissing that. I mean, I want to get Christian's thoughts here because he's our momentum trader here. Palantir still has all the momentum. Has the Reddit story shifted a bit here, or is this just a pause and now, eventually it's going to resume to upwards? Thoughts?
Yeah, this is a great one. I'm just going to share my screen just for 1 second.
Sure.
Please.
Here's my Reddit chart, which I'm looking at. I actually added this to the watch list today. I want to pay attention to this stock. It's a momentum name. It didn't quite have like the greatest earnings, but the earnings were still decent. But it's a story name to your point. So I'm watching this one. I'm watching the pullback. It is a very expensive stock. I did not want to buy it when it was around that 220, 230. Now it's down about 40 bucks. It's still an expensive stock. So you still kind of have to fight with that, in your head. But I am liking this pullback, and I want to see what it does at both that 50-day moving average as well as this level here at 188. So I'm glad you brought this stock up because I'm curious to know like if buyers are going to start to resurface here after a pullback of 4 or 5 days.
It's like the Palantir stock, and we've seen these pullbacks on Palantir before get bought, and that's why I bring it up here too. Maybe this is another chance just to buy the dip on a stock that, we've obviously, has been loved for a long time. Now, again, your value investors, and I always talk about this, once the momentum breaks, that's where you run into trouble. That's where you can run into like a Celsius type move, which we're going to talk Celsius in a minute here too, where, stock goes 90, 80, 70, all of a sudden, momentum says, oh, the momentum's gone. And value investors are like, hey, we're down here at 20 bucks. We're down here at $20. And you get that gap between value and growth. So Reddit and Palantir are pure momentum stories. There's no value investor touching any of these stocks with a 10-foot pole. So you have no valuation support. So that's the difference. So if momentum breaks, that's where you start to see stocks cascade quickly down through levels and levels and levels, and you get those Celsius type moves. Those often eventually happen with these names, but right now, still momentum is there, and we got to see if it's going to resume on the Reddit. We got a tip. We got to go to the tips always. So we got Fubo, $9.99.
Is it
We are
really?
getting, Craig LeBlanc wants to talk Fubo. We get a tip. You want to get your ticker talked about right away?
Oh, I
Give us
thought
some
you
money.
said.
We can pay
Oh
Brentster
man,
now.
I
At
thought you
least
said
a little bit.
Fubo was $9.99. All right. Here's the deal with Fubo. I had a lot better take on it on these couple days here because that was just a ridiculous move. That was off the Disney, right?
Yeah,
Was that? Yep.
I think so. Yeah.
I think you found a good level of support here. This 375, 380 area. So I don't have any problems if you want to, take a shot here at down, $4. Not the most, it had 2 good days and then a bad day, but found a good level of support here. Let's see if we can take back some of that move. What's your fundamentally? I mean, you're not going to get this Disney news again. So that was a gift.
You could
Now,
get more. Yeah, I that's a good point, Joel. Like, it's probably not going to be a headline like that again. Maybe we get more clarity. Maybe we get something else. But it's in consolidation station, waiting for direction. And direction often comes from the next headline. So, or an analyst vote of confidence, or an analyst, not vote of confidence, where an analyst would say sell. So sometimes, these stocks sit in consolidation, waiting for a fundamental piece of news. Does it report earnings anytime soon? Because that could be a fundamental piece of news that it would need. I don't know when it reports. Brentster, can you look in the background? Find out when Fubo reports here. But sometimes it's good to strike when stocks are in consolidation station. It's like place your bets. The horses are lining up on the track here. It's time to place your bets. That's consolidation station. I always think that's the best time to make your bets sometimes. So if you think this move resumes, you've got to check back here, probably over 50% of the move off the bat. So I don't mind a buy here, but I think you got to stop yourself out. If it ever went below 3, I would say bears win and I'd be out. But that's a big move.
Fubo is going to report in 2 Fridays, last day of the month, February 28th. It is confirmed.
Okay. So that's maybe what it's waiting for here too. Maybe we stay in consolidation station until we see, what's happening here. Nikola has resumed trading. It was halted for news. The news pending was the imminent bankruptcy that everyone was predicting. Voluntarily initiates comprehensive voluntary Chapter 11 sale process. So it is over. Nikola's story ends in tears for the bulls. 42 cents, still got a little bit of life there. I guess we've seen bankrupt stocks rally before, so don't just assume just because you're bankrupt doesn't mean you absolutely go to zero, but also doesn't mean you usually come back that quickly either. So down 44%. The Bears have won here. Christian Fromhertz on mute.
Feels like it's really going downward on a hill, doesn't it?
Yeah. That's it. Snow Hill.
Bad joke.
Wasn't this one of the first SPACs? Didn't Kenny brought this when it was a different stock? And I always bring it up.
I don't ever remember what the SPAC names were though. Somebody that I
haven't heard about the SPACs in a long time.
Was this one Turtle or Shell?
No, it's like IOQ. I'm almost there, guys. Help me. IONQ, IO. What the hell was it?
I don't know.
Trying to think.
Someone's
chat will know.
My tongue. It had a Q in it.
I'll go find it.
Help us out.
I'll be right back.
VTIQ. Rob Hood, we can always count on you. Rob Hood, VTIQ. Absolutely correct. Okay. Continuing on our merry way. Back to the earnings parade here.
Like, can I say something about Reddit real quick?
Please.
I mean, you might be getting everyone out of the pool that wants to be out of the pool. I mean, because the volume, like 21 million on the 12-point down day, and then 8 million, then 9 million. So could reach a little bit of seller's exhaustion. I see multiple supports area like around 172. So that's first, it has to stop going down. Second, it has to put 2 or 3 lows in the same area and then turn up a little bit. But the volume has come down a little bit, so maybe I mopped up some big sellers there. Oh, let's just jump to we got Did they give a stock here for?
Jay Mr. A gave us $10, but there's no stock. He's got car on there though. We could cover car. I have his budget group if you want it because there's a car on
No,
there.
he'll give us a
We're
stock.
reaching. Give us a stock. Come back to a stock, but that's okay. Continuing on, Garmin. I wanted to talk Garmin earnings. They reported this morning the stock is popping up big time. This is one of those like stocks that has turned into a retail darling as well. I'll give you the earnings here, just bringing them up. GRMN. Earnings of reported this morning, 241 versus 203, $1.82 versus $1.70. Beating the top, beating the bottom, guidance slightly higher. They also recommend raising their annual dividend by 20% to $3.60 from $3. People like money. So Garmin popping up 7% here this morning. This stock is now at a new all-time high.
They did it again, Garmin. I don't, I would really like to dig into Garmin a little bit more. I know people still use it and so forth, but if you look at the earnings history of this stock, it has gone up, let's see, out of the last 5 quarters, 4 out of the last 5 quarters, they just continue to do very well. I always hear about threats to Garmin and so forth, but man, they are doing something right, because they just continuously beat earnings and have good reactions.
They do.
And yeah, this is going to should be new highs for Garmin.
Yeah,
Yes.
stock, and again, it's a retail darling too. People like this stock. It's been, just think about it. This was, a $50 stock, well, $70 stock just 2 years ago, $227. Been a great place to be.
Is it just the watch or is there something else going on at Garmin? I'm reading the chat. A couple people say that there's such a great market for watches and GPS. Is there anything else that I'm missing in Garmin? Why it's so?
I think
why the company's so strong?
They've got her a little bit as an AI play there too. I'm not sure, if that's data maybe on their users or what it is, but they've got this as an AI play. They got some stuff in the watch that's AI endurance. I'm just looking through the watch itself. So I think the market has this as a bit of an AI play too. Grab that AI story somehow. However way you can grab it, and your stock's going to take off. Toll Brothers, these home builders need to figure out AI. We're building AI houses. I like that idea.
I would just say if you have a target up here, a little well over the former all-time high of 223.33, let you have a target in this area or see how it's reacted after good earnings reports if they sell into it. But right now, just trading well above the all-time high. And 4 days ago, this thing bottomed at 201.63. So target, take it. If not, move your stop up.
SEDG, Laggard Central, working here. Lately, it has been working for a number of stocks. This is selective, though. But is the solar stocks, are they back here? Solar Edge, which obviously wants lower interest rates, needs lower interest rates. The stock in the peak of the tech bubble was up to $389. Recently got down as low as $10. Is back up to 19. So the people who bought it at 10 are celebrating. The people who bought it at 380 don't even care.
Hey, watch your bids here, Dennis. Watch your bids.
We have a number 830 coming. What's going on? We're taking.
I don't know. Christian, what's going on?
I don't see anything.
There's a number-wise, there's housing starts. I don't think that would be affecting the broader market like this. Let me look around a little, guys.
Well, and it's not 830 yet, but maybe I should go wide. So Solar Edge, misses. Oh, the reports is all bad, really, but the guidance, I guess, was okay. They said revenue 195, 215. Sales actually beat slightly, too. The earnings was just a disaster. They lost another $3.52. This company's a cash-burning machine. I think it remains that way. I don't know. Again, it's just maybe oversold. Stocks are going down for years.
Guess what the short interest is in SEDG? Because I just looked at this. Whenever I see one of these names that's like perked up like this, that's beaten up and so forth, any guesses of what the short interest in this company is? And I'm going to say, I'll give you a hint. It's pretty large.
38. Oh, me and Joel said the same number, 38.
That's close enough. I got 40%, I see. I mean, that could get the stock, moving a little bit more. I mean, if shorts have to cover a little bit, 40% short interest, that's very high.
Yeah, I mean, that's the turnaround here is probably a bit of shorts. I mean, the only people probably buying this are shorts covered because it's been a horrible stock to be long. So the shorts won in this. They're probably scrambling here this morning, though, because this report was not great. up 17%. Its brother-in-law, ENPH, starting to show a little bit of life here too, and I say a little bit of life very carefully. Kind of triple bottom at 60, same place we bought in November, crawling up to 66. Definitely not flying up, but is there a case, Christian Fromhertz, that the solar bottom is in, or is this just another rally to sell?
I don't have anything majorly on here. One name that had good earnings a couple of weeks back was NXT. That's a name that I'm watching. I'd probably look at that name other than just looking for a trade, in terms of an investment.
What was that symbol?
Next tracker.
NXT. We just had
it's kind of been the turn into the retail darling here. Next tracker. Kramer, you know what turns these retail darlings sometimes too is honestly when Kramer starts covering them. We give him a lot of heat, but he is very influential, and he's been covering this one for a while here too. And he starts getting on the backs of a stock. And, he doesn't jump on. We know Kramer is a pure momentum trader. Pure momentum. He doesn't pop in until the stocks are really getting hot. And then he starts like Palantir. He's right there. Rah, rah, go, go, go. Valuation doesn't matter. Like Kramer is your ultimate momentum trader. So, sometimes when he hops on, he's late. But sometimes he hops on and he's in the middle of it. And then he really gets it going and keeps it going. So, this has been a Kramer stock for a while, next tracker. Continuing.
We just had some economics that hit the tape.
Yep.
It's the housing data that hits. Looks like housing data. Looks like that's a miss there, and already kind of weak estimates. Monthly housing starts fall 9.8% versus estimated 7.3. Also, building permits that was a little bit better, plus 0.1% versus estimates of negative 1.5%. Let's see if we got any movement here. Not much. I don't see bonds really moving too much. So, but the trajectory, as Joel mentioned, is down a little bit now over the last half hour in equity futures.
The Homebuilders have just been an epic disaster for 2 months here. But it's funny how they went, from bliss to that PIS word that I won't say out loud because I don't want to get punished by the YouTube, like Mitch says. But you look at KB Homes, you look at Toll Brothers, you look at Lennar. All of these stocks have given back like a year of gains. Like it's been a violent sell-off for them. And they're all coming, back into like KB Homes is back where it was start of 2024. After being up significantly in the middle of 2024. Toll Brothers, the same thing. It's given back the entire year. Last year of gains. Lennar, same thing. Giving back more than the entire year of gains. Is there a case, or is it just momentum is purely broken here now? Now these are, and obviously the numbers coming out here, with sales going down, maybe we're starting to slow down a little bit in this economy as well. That, people aren't going out and building as many homes here, struggling a little bit. Maybe
building costs are high and
they're
rates,
super high.
Are they higher than when you built your house?
I don't think so. I think I built the peak pricing. Never built a house during COVID. I trade stocks really pretty well. I buy pretty good prices. I obviously build houses very poorly. Yeah. I'll never stop complaining about that.
These things haven't stopped going down. So, I don't know when you step in. Didn't Warren step in one of these? And did he get in and get out?
He's been in. Well, he owns Benjamin Moore, right? I don't know if he owns any of the builders, but yeah, Toll Brothers. I know we covered it already, and but yeah, I'm waiting for some type of buy signal or something positive to come out of this group yet, and I would say not yet, right?
I think so. Not yet.
How about shorting Sherwin-Williams?
Oh. Yeah, well, it goes hand in hand usually with the home builders. Is there a case here where Sherwin-Williams, might be a short? It's starting to fade. Yeah, I could get on that bandwagon. We always talk about setups. People don't typically like going short stocks, a lot of retail traders. But, there's a lot of money made on the short side, more money made on the short side. I don't mind that, Joel. I don't mind that setup. When does it report, though? That's another question because I hate shorting stocks ahead of reports. So did it report already or not?
I'm looking, Dennis.
That's my question. When you're setting up a swing short, especially, when Spencer's going to find it, but when you're setting up a swing short, especially,
Spencer,
look when it reports. Did I say Spencer?
They reported on.
My kid Spencer.
They reported on January 1st, Dennis. I mean, Joel.
Okay, so they
What's your
already
name?
did kind of. So they already reported. So that's the good news here. Yeah, you know what, Joel? I could get on that.
Okay. This 350 looks huge. I mean, if you want to short on weakness, I know there's a pair of lows under that, but I mean, it's been holding 350 since the middle of January. But it's 835. Let's
Woo!
let's go to our guess.
All right, here we go. Scott Devitt, Managing Director, Internet and E-commerce at Wedbush. How is your morning going? How's your week going?
Great. How are you guys doing?
Just a little cold. Just a little cold here in Detroit, but that's about it.
Nice.
So Scott, I look at your list of stocks here that you cover, and I mean, you must have a sore neck because I mean, you got you got some wild childs on here. You got a lot of stocks that have a lot of movement here. I guess I want to start with the one that I think reported the most recently here. Uh, Airbnb here, big gap up after earnings. Talk about the report and then your rating and the stock moving forward.
So the report I would categorize as better than feared. You know, the company's been embarking on an investment cycle to incorporate new capabilities. Most notably, the what's coming next is the relaunch of experiences bolted onto the Airbnb marketplace, and so investors were concerned that margins may come down more aggressively than they actually are going to. The company guided to a 34.5% margin for 2025. That combined with fundamentals that have held up is what really propelled the stock to move higher. We like it, have a outperform rating on it. I think they're entering a period where gross bookings growth and revenue are going to accelerate off of easing comps, and the launching of these new offerings such as experiences and others to come is something that's going to elongate that growth cycle. And now that the bottom is in for margins, you're going to get a little bit of margin overperformance as well. So that's the name to us that really stands out now in travel.
All right, let's stick with the travel theme here. And BKNG, great stock. Just keeps going. Hardly ever talked about, probably because of its 5,100, 5,200, 5,100 stock price. Let's just talk about bookings and Expedia.
So Booking is the blue chip in the sector. You know, that run's been going on for 20 years now, and we what we like about it is it's a very well managed company. It's like all these travel companies. There's a limited amount of capex, and Booking, because it's headquartered in the Netherlands, has a very low tax rate, and so converts its EBITDA to free cash flow at a very high rate, and uses all that capital to repurchase shares. So all along the way, it's reducing the number of shares outstanding. And as I mentioned, like over a long period of time, it's been the best managed company. So it's had the highest growth rate, has a better margin profile than Expedia. Trades at a elevated multiple relative to Expedia. But if you're going to own like one name in travel, that Booking is the blue chip name. They still have not reported yet this quarter, but because of Expedia and Airbnb reporting in front of Booking, expectations are elevated. Usually what tends to happen is you get two reporters with good news, and then the third one, there's nothing that it can do to do better than what investors are now expecting. So that's something to watch out for. But I would say that if you're ranking in terms of the duration of success, Booking is definitely number one on the list. And Expedia, which you brought up, this cycle has done a very good job of managing the business. It's traded at a very low multiple for years because of misexecution, and they've strung together a period where they're comping against more difficult comps, and the growth is holding up, and the stock's responding. It's been a very good, performer here the last 12, 18 months.
Scott, I have two questions for you. So number one, we're looking at, Airbnb, Expedia, Booking, moving higher. I mean, is this telling us that the consumer is still spending on travel? I mean, it's been such a nice theme, but looking at these three names that reported good earnings, like, I don't know. Is what am I missing? Is there a bad story that in terms of the consumer? So I guess that's the first question for you. And then also another group that I tend to look at for like this very discretionary is whether folks are paying for delivery, because like to me that's one of the things that can be cut. Like if you're under distress, I think delivery charges are probably the next thing or one of the first things that gets cut. But you cover a couple of companies, you cover DoorDash, and you cover Cart as well. And it's kind of a similar theme that's going on there too, as well. Dips are getting bought, and these are strong stocks. And would you stay with these stocks, or do you think that they're getting toppy?
Well, I mean, this has been an extended period of prosperity, right? And interrupted for a short period by the pandemic, and then accelerated by all the stimulus coming out. And when as just answering your first question first, as the economy reopened, travel recovered, and you keep kind of anticipating that the economy is going to peak, and with that travel is going to peak, and it hasn't happened yet. It will happen at some point in time. In the future, there'll be a time where you don't want to own online travel because the category is the most highly penetrated of internet categories. Leisure travel is over 70% booked online, and and it's tied at the hip to GDP, meaning it doesn't grow at GDP, but it grows at like a 2x multiple of GDP. So when GDP slows, consumer spending slows, the category is going to hit, and all three stocks that we've talked about will as well. It hasn't happened yet, and they don't like ring the bell or tell you when it's going to happen, and so it's definitely something to monitor. That we are deeper in an economic cycle, and so this great news that you're getting out of the travel companies could be more of a cautionary flag than it is a positive indicator, is kind of how I think about it. But there's no evidence yet that the cycle's ending. And then continuing on that theme, as it relates to delivery, because it's the same type of question. uh Consumers are spending. I mean, you see pockets where there's weakness, but because of all the wealth that's been created in the last half decade with stock market appreciation, but probably more notably housing wealth that's been created in that window of time, that consumers in general, there may be pockets that don't, but consumers in general have a lot of excess capital, and they're all employed, at the moment. And that tends to be what drives these discretionary decisions. If and when that does flip in the other direction, then names like you mentioned, which would be DoorDash, Cart, also the Eats portion of Uber, but also the mobility aspects of Uber too. Those are companies that are going to be exposed directly to the economy, that the secular aspects of their growth won't overwhelm, and would likely underperform during that window of time.
Okay, thanks very much. Next question that I have for you is I really like a couple of the companies that you cover because this is a hot area of the market, international right now, which is
Mm.
outperforming the US right now year to date, which has been very impressive. You cover a couple companies, Sea Limited, which has been breaking out. Singapore companies are very strong. I see Melly's on your list. I'm also, which I'm very interested because that name's going to be reporting earnings. Any type of earning preview, do you think that follows through? And then I don't know if you cover this company, but it's a very small cap company, so I don't think you do. But I'm going to ask you about Grab too, which is going to report in a couple days too. Any thoughts on these?
On so we cover global e-commerce. I've also covered the China e-commerce companies over the years. I don't at the moment, but I've covered Melly, going back to when it first became a public company, and it's such an A+ management team that's built out a capability in that region that effectively did everything that eBay and PayPal failed to do in its markets when it was building itself prior to the maturation of e-commerce in the markets, that eBay mostly serves, which is the US and Europe. And whereas Amazon, came in behind eBay, and structured retail e-commerce, Melly's morphed its business in the direction of Amazon and protected itself from competition, and now sits in a dominant position from an e-commerce standpoint and from a payment standpoint, because they built the payments business bolted onto this marketplace business and then opened it up to the rest of the internet. The business is as healthy and as strong as ever. Probably the most notable thing at the moment is just the dramatic appreciation of the US dollar relative to Latin American currencies. So from a reporting standpoint, it's very tough for their numbers to exceed expectations because all models aren't tied in real time to currencies. So they're likely going to have, on a reported basis, inability to beat numbers, but on a constant currency basis, I think that the business should do very well. And then similarly, C, and what we've also covered that since the IPO, and it has similar characteristics to Mercado Libre. So looking at pattern recognition, they have the ability to kind of control Southeast Asian markets the way that Meli has in Latin America. The thing with C is that has been a number of companies competing. Lazada, owned by Alibaba, a company called Tokopedia. TikTok is dabbling in those markets, as well as the Temu, which is owned by PDD. And so there's been notable competition. So C is a lot less developed and a lot less dominant, but is showing similar characteristics as Mercado Libre to become that leader of Southeast Asia. And the stock was a rocket during the pandemic, imploded on itself, partly due to self-inflicted wounds and partly due to consumers going back to their real lives, like all these internet stocks in 2022, and then it's had a miraculous recovery since. So we do still like that name as well, and I kind of position it as the next generation Mercado Libre. So both companies, I think, very well positioned in names that in periods of weakness investors should own. As it relates to Grab, I just don't know enough about it to be able to comment on it.
Gotcha. And then I also see that you cover these three little companies, Amazon, Google, Meta. I don't know if people have heard of them. I'm joking, of course, but clearly Meta has been the leader in the group in terms of after posting earnings and so forth. What about Google and Amazon? Are these kind of, I don't want to call them, I think it's too harsh to say dead money until they report again, because the earnings weren't great. But any between the two of these, do you favor one or the other?
Well, I favor Amazon more long term. I think it's just better positioned in its businesses. And even though the quarter itself wasn't the best the company's ever had, most notably because of the capex increase, the business was healthy. Probably could have had an extra point of growth, in each of the business units. But what's great with Amazon is it sits in a dominant position in retail. It's building a very capable number 3 player in advertising that's now over 60 billion in revenue, doing 60% operating margin by our estimates. They don't disclose. And then AWS, which is kind of retaking over its leadership position from a narrative standpoint in AI, as Azure started to slow a bit. And so you have this long trajectory where the two higher margin businesses of advertising and AWS are growing at a faster rate, which leads to faster operating profit growth and revenue growth. So we expect Amazon to grow operating profits 20+% compound over the next 5 years versus Meta and Alphabet, which are closer to the low to mid-teens. So Amazon, among the three, to us sets up the best over a multi-year basis. Alphabet, is probably the most dislodged of the names right now, meaning the shorter term horizon, the narrative has the possibility to flip back positive, and have the stock back towards 2 to 210. The issue with Alphabet has been this view that search is disrupted by AI. The reality thus far has been that search has held up very well. In fact, the only really area to push back on Alphabet has been also their capex increases. And it's interesting because the market looks at Alphabet capex increases as a negative because it's defending their turf, and it looks at Meta's capex increases as a positive because it's going after growth. I don't know that that's fully the right answer, but that's what the market's pricing in. And I think if you've looked at Alphabet over just the past year to year and a half, it keeps toggling between AI loser, AI winner, and right now it's in the AI loser bucket. My bet is that it's going to flip back positive when they have a quarter where CapEx isn't rising. The search business is still strong in the next 1 to 2 quarters, and then the stock trades back towards the higher end of its band, which puts it back towards a $2 to $210 stock, which is a nice 15% move back to where it was before it's come in here recently. So that name, the setup, I think is now better because of the bad news. Amazon, among those two, I think is the better position long term. And I just add with Meta, the band around upside and downside with Meta is wider than Amazon and Alphabet. They make big bets, and historically they've been right. And right now investors believe in it.
Scott, buy the dip, right? That terminology is worked on many stocks many times. Trade desk. Is it time to buy the dip?
It always works until it doesn't, right? But I think that it will. The thing with Trade Desk right now is you're in this vacuum of information where it's a complicated business, right? It's ad technology. It's not delivering a widget to the home. You conceptually as an internet investor, it's a lot more complicated than some of these other businesses. So when something goes wrong like this, it freaks investors out because they can't really put the puzzle pieces back together. And Trade Desk just really surprised investors for the first time as a public company. That's the first time outside of the emergence of the pandemic that it ever missed its own guidance. So that's caused investors to lose a little bit of trust. They came out on their call and callbacks and kind of reaffirmed the long-term position of the company. We believe in them, but I do think that they need to have a quarter or two of execution to get the legs back under them, such that the stock starts to work again. Because there's a narrative that's now building on the back of this quarter, which is that Amazon, which has a competing demand side platform now in its advertising business, and others are starting to compete away Trade Desk's advantage. The company adamantly denies it. We don't see strong evidence of that, but nonetheless, the stock never had valuation support, so it's not like you can make an argument 80 is the bottom because it's the X times EBITDA now. It's just going to flail around until better news comes ahead. And I think their new ad platform, which they're transitioning to, called Kokai, which has been part of the problem, is how slowly it's transitioned, is supposed to be completed by the middle of this year. So by the June to September quarter, I think you're going to start to see better news come out of the company, and that's when the stock will recover. And so if you're gingerly purchasing the shares on days of extreme weakness, at levels here and lower, and have a 6 to 9 month horizon, I think you can do well owning it.
Scott Devitt, Managing Director, Equity Research over at Wedbush, covering e-commerce, online travel. Scott, you were called the Wikipedia of stock research here.
Oh my
Great
gosh.
information. Thanks for joining us here on Pre-Market Prep.
Thanks, guys.
Thank you, Scott.
Bye-bye.
All right, Triple D, I see you banging away on the keyboard there.
Yeah, I'm just looking for short squeeze stocks here because Christian Fromhertz has kicked off another short squeeze in Solar Edge. It continues to go higher here, up 28% here now. This will get the short sellers a little bit nervous,
Attention.
and the short squeezers a little more excited if this continues here, because this was not a fabulous report. I think Christian's hit the nail on the head. I think this is a squeeze here right now happening in Solar Edge. And if one stock squeezes, sometimes other stocks squeezes. Its brother-in-law ENPH is slowly crawling up here. But I went to the list here. I'm looking at that highshortinterest.com that I often go to and look at the list over there because I know a lot of retail traders follow that one. Number one on the list is B. Riley, and that one just has not moved at all, really. It's been in the gutter.
What's
but
the
one
symbol
that's
on
perking
that?
up. RILY, but I didn't want to focus on that one. BYND is interesting, though, here, because Beyond Meat actually started moving yesterday here, Mr. Fromhertz, and we are continuing in a tape where a lot of things are down. Beyond Meat's up another 15 cents here. So we've seen Beyond Meat squeeze before. Is there the potential for BYND to start squeezing here again? I throw it to you, Mr. Fromhertz.
Well, next time I mention the short interest, I'm going to go to the background and I'm going to start buying because I should have done that. What an idiot.
Wow, is it moving?
But Beyond Meat,
You don't have any position in Solar Edge, correct?
No, I don't. I
Yeah.
don't.
That was a joke, but
Beyond Meat is 43% short interest, but you have to have a catalyst for some of these short squeezes. Are you going out and you're buying, you eating some of this fake meat, or what's your
no.
catalyst?
The catalyst is a Solar Edge, SEDG. That one starts squeezing, the other starts squeezing. We've seen this before. It's kind of, like a little disease. Like the squeeze starts and then it spreads and spreads. So if they're going to start squeezing a little bit here, you know what other one's on my radar here and hasn't even moved, hasn't sniffed? But just interesting to think about here is number 6 on this list of highshortinterest.com. It's Kohl's. KSS, and it has been an epic disaster, just an awful stock, but the short interest is 40%. Could Kohl's get a little bit of a lift off a Solar Edge? I'm asking. I have no position in it. If it starts to move, maybe I'll get interested in it. But at this point in time, I mean, what are your thoughts here? Can Kohl's, we reaching? Obviously, Solar Edge, nothing to do with solar. We're simply looking at one stock squeezing and saying maybe there's a potential for others to squeeze.
Maybe they could put solar panels in the empty parking lot.
Look at that. Look, I like you. Let's get Christian Fromhertz for CEO of Kohl's. We're going to turn this around right now on this stock. But, Beyond Meat started squeezing a little bit yesterday. It did. It was up 10% yesterday, 40 cents on a $4 stock. So this isn't just isolated completely here. So I think, if you're sitting, Hertz is another one. HT Zebra had a really good day yesterday. I'm just cherry picking off this highshortinterest.com. First time looking at it right now live here. Like I've looked at the site before, but first time, in a while that I've been over there. But when you see one squeezing, I go to this list because, there's a lot of other, and there's lots of places to get this short interest. I just know this was a list that was talked about in the GME short squeezes. It's kind of got some history here. It's, it's simple little site, and it's just, I don't know how updated it is always either, but, it's got the information on there and simple to look at. Hertz was up another 10% yesterday too. Hertz is one that's been getting the hurt to it. It's just holding on here, but there's another one on the list. Anybody else? Any other chat? We'll throw it to you. Any other ones you guys like for short squeezes?
I have one too, which has been mentioned in the chat, but Celsius, which is up a little bit. Now they're going to report.
What's the short interest on that one first, Christian?
23%.
So nothing.
Not as sizzling high as your 40% and a couple of ones that you mentioned, but I don't know. I see this at the gym. I don't really drink Celsius. I don't know if people are still using it, but I think if they say anything positive on their earnings report, which I think that they're going to report earnings. Anybody have the earnings date for Celsius? I think the 20th, right?
Yeah, and they did give some, they did give a lot of information last night. So Celsius is popping up. They did announce the timing, but they also in that, there was other information on Celsius last night. Why can't I find it here now? It wasn't just the timing. No, I can't find it now. I don't have it up. Keep talking, Christian. I'll find it in the background.
I think that I didn't think they had an earnings date announced from what I saw.
They do now.
Yeah, I think is that just what they announced?
Yeah, last night they said they're going to release full fourth quarter and full year guidance February 20th. So we have a date now because we didn't have the date. But there was other things, like I'm reading through. I don't see anything in this release though. Maybe it was just Twitter chatter, on other stuff here too, because they were chatting about like all kinds of crap on it last night. Like potential CEO, like they're talking a whole bunch of stuff. Anyways, it's really popping up. We're on short squeeze, day for SEDG. Not out of the realm of possibility that a beat up stock like Celsius, and I mean, it's $90 in summer, $20, $23. Not out of the realm of possibilities could squeeze more. I like it.
So do you think, a question to you guys, do you think if they mention any, what could get the stock to get going on earnings? I mean, it's probably anything positive at this point because it is pretty beaten up. Are you guys Celsius?
The bar is on the ground. The bar is literally under the ground, sitting on the ground. And if they're going to go under the bar, they're going to have to get a shovel and dig. So they're literally, maybe they can do that. Maybe they can get a shovel and dig, and and they say, just epic stuff. But they moved it up. They've got a date for it. I kind of think the investors are excited. I kind of think shorts are nervous. So I wouldn't be surprised if you're seeing this is a short covering rally here this morning as it's trading up 6%.
How about another product? I mean, they just have like one drink, right?
That could help. I don't
Yeah.
know. There's lots of those. I see them there, and my kid likes them. Like, or not my kid. My buddy Jeff. I don't think a kid can drink them because they're full of caffeine. But so I should watch what I say. But my buddy Jeff likes them. So I don't know. I've tried it before. I've tried it once. So have you guys tried it, Celsius?
Yeah,
haven't
I
tried
had it
'em.
once. I can't. I mean, those things
Okay.
are. I mean, they don't. I don't know. They don't do anything to me. I mean, I don't know. Whatever.
Same here.
You're in too
I'm
good a
with you,
shape
Joel.
already, Joel.
Yeah.
Yeah. I agree.
Okay,
All
so
right.
could be
Dennis,
so a little bit mixed
Dennis,
signals. Go, Brent.
real quick, you did just say something really good there. You said that they moved their earnings report up. I just wanted to confirm they had normally reported like the last week in February and maybe even the first week in March. So if you're one of those investors who thinks like companies try to get good news early,
Yeah.
just saying.
Yeah, I agree. I think that's the main reason why the stock is rallying here, because when you move the earnings date up, people are excited that they want to say something good.
There you
They don't
go.
want to wait a week to get this out there. I mean, if you were reporting bad earnings, like going to be a disaster, are you moving the earnings date up? Probably not. You're like, yeah, it's going to suck. So I think they probably do have something good to say, and they're excited to say, and that's why they're moving it up. And I think that's why the stock's going up. I'd be cautious just flat out, shorting this pop here this morning. So 9 o'clock on a Tuesday, Wednesday. It's a synthetic Tuesday, right? With the day off. Isn't that what you say, Joel?
Yeah.
9 o'clock, Christian Fromhertz. Opening thoughts, closing thoughts. Are they the same as your opening thoughts?
Closing thoughts, yeah, they're pretty much the same. I'm watching small caps really get hit here the most out of futures. So I want to see if Bitcoin can stabilize for the day. I don't really like, I talked about that the second half of February is generally weaker in terms of seasonality, and one of like the proxies that I'm watching is for risk taking is Bitcoin. If Bitcoin can kind of hold the gains today, then I think like we could continue to kind of see the buy the dip mentality through the week. But I would be a little bit concerned if like Bitcoin, because I think it's a proxy for risk taking, if that starts to kind of dribble lower again, then I think that I want to be more of a net seller than adding positions as the week goes on.
One stock we did not mention was Meta. We meant to mention, we were going to
Oh,
start with it, and I
yes.
don't think we ever did. 20 days in a row, Meta was trading higher. Down goes Fraser yesterday. And with a blaze, Agoy gets back 5 other days of gains there. Down again here this morning. So they're like, oh, crap, the momentum's over. Let's sell. Interesting. We're down another 5 points on Meta, so it's showing some weakness here. Does the dip get bought? Before Christian goes, I got to ask him, does the Meta dip get bought today? He's on
Yeah,
mute.
I mean, I think there's been so much momentum, and I think you mentioned that red bar took out like, I don't know, like 3, 4
4 or 5
days of
days.
price action. So I don't know if it gets bought today. I think let it settle in a little bit and let it like form a little bit of a bull flag and so forth, and then I would kind of return to it. But I think when names run I don't want to say parabolic because that's extreme, but when things run that far, I think you let them breathe a little bit like a fine wine.
Ooh.
Yeah. One red bar like that after that kind of run. Oh, you got to look for at least 1 or 2 red bars before you buy the dip. That all-time closing high from yesterday. Wow, that's already $26 away.
One
I'm
imbalance look here, Joel.
yeah.
Just Bank America. I don't know. I didn't see any news on this. If there is news, let me know, chat. I did not see any news. 1.1 million to sell. So that is a huge opening imbalance, and that I believe is the reason the stock is down 1.5%, because that's about as big as you're going to see for a sell imbalance for Bank America. Stands out like a sore thumb, because I don't see any other major imbalances here this morning. Sometimes when you see them across the board, there's something going on, maybe as an institution just dumping. Seems like there's just one big seller in this market, and that seller is in Bank America, and Bank America has continued to leak the entire pre-market session because that sell imbalance has only grown. 1.1 million to sell. Keep an eye on that one today.
Man, my final thoughts is I thought that rally at the end of the day yesterday was so ridiculous. And it had some follow through overnight, and then we're just giving it back today. I don't know. Can't get bearish yet. There's really nothing to, to get the claws out to be super bearish. But man, oh man, buying the dip. Yet I got matching lows on the downside from Friday and Monday. Keep an eye on that. No major damage until we take out 6120. And right now including the Globex session, you got a double topped at 6157. So that's it for
Caden saying
today.
Berkshire sold. That was yesterday. I was trading it on that. So that was actually disclosed the night before. So that was the reason for the Bank of America fall yesterday. Today, is another huge fall, and I don't see that reason for it. So that was actually, the 47 move to the 46.5. That was the Buffett sell, which was yesterday. I don't see the news here this morning. I don't think there is news.
Okay. Jim Sony joining us tomorrow for his outlooks on the market. Sorry we couldn't get to all your questions today. We're working for a remedy on that. That's it on this Wednesday. See you guys tomorrow morning.